Hey guys, what's up, how's it going? My name is Robin. Welcome to today's video, and inside today's video, I'm going to be showcasing to you guys 3 growth Canadian-based ETFs that are perfect to buy in 2021. So if you guys are brand new to the channel, my name is Robin and I am a Canadian-based investor. I'm all about showing you guys how I've been growing my stock portfolio over time and all about transparent investing. So in today's video, we're going to focus on ETFs. I'm a big fan of ETFs, and I normally don't talk about growth-based stocks that much on this channel. We're more dividend focused, but you know what? Growth stocks are cool. I think they're awesome and they're good to hold. In fact, I hold a lot of growth stocks inside my TFSA that are US based. So growth stocks definitely have some potential. They definitely should make up some chunk of your portfolio. And in today's video, that's what we're going to be focusing on. So if you guys enjoyed the video and you guys want to help out the channel, be sure to subscribe and like the video. And if you guys want to get set up with Wealthsimple Trade, there is my referral link in the description of the video. You guys can check that out if you guys want to take advantage of some free offers and you guys want to help me out. Alright, let's jump inside the video and let's talk about the very first ETF that you guys should check out. Alright guys, so the first ETF we're going to be focused on is going to be a tech-based ETF, growth-based ETF called XIT. Alright guys, so the first thing we're going to do here is I'm going to give you guys a quick little overview of each ETF that we talk about in this video. I'll do a quick little deep dive. I'll give you guys the information that you need to know, and I'll talk about my opinion about these different ETFs, and then we'll kind of get through this as quickly as possible. So the first one we have here is an iShares ETF S&P TSX Capped Information Technology Index ETF called XIT. So you guys want the ticker, you want to look it up in Wealthsimple Trade, just type in XIT and you guys can get that information. It's currently trading at $60 and it's up 34% year to date. So basically that means at the beginning of 2021 to where we are now, it is now up 34%. And this ETF is used to target exposure to Canadian information technologies. So this is essentially a tech-based ETF. Now, tech-based stocks have done well over the past couple of years, as we've seen, especially in the US market and whatnot. But the big challenge here is now, are Canadian tech stocks going to perform just as well? Now, we've seen in 2019, in 2020, they've done well. And you're going to see that in 2016, this fund didn't do so good, 3% return. 2017, it picks up a little bit to 17%, which is pretty good. 2018, pretty decent. And then 2019 and 2020, the return for this fund is 60% and 54%. So that's pretty crazy. And you can see on this graph here, if we click on this graph, you guys can see the growth of this fund. All term, there hasn't been a lot of growth from about the early 2000s to, I would say, about maybe even negative growth until about 2015. So historically in the past, this fund has not done well, but over the past 5 years, we've seen it slowly start to pick up, and then the past couple years, it really jumped up. So it's going to be very interesting to see if some of these tech companies, the Canadian ones, keep going the way they're going. I think that we should see some success, but once again, when you're looking at information like this, it can make it seem like this fund has returned really well. But keep in mind, a lot of this growth is coming over the past couple of years, so it's obviously inflating those numbers. It's important to kind of know how to kind of interpret that correctly. So once again, good growth, but a lot of that coming over the past couple years. Let's take a quick peek at the holdings. We have 19 holdings inside this fund, which is pretty small relatively, but there's not a lot of Canadian tech stocks, as you guys probably know. Distribution yield is at 0.04%, so that's pretty much, I don't know, that's pretty much non-existent. I don't think you can get much lower than 0.04% for distribution yield. And I'll just scroll down here really quickly to fees. So management fees are 0.55%. Total fee is 0.6, which is not crazy. It's not super low, but it's not super high either. It's kind of like that medium to a little bit on the higher side, but it's not that bad. For the growth that you could potentially get, obviously it's not that big of a deal. Risk indicator here from iShares is medium to high, and I would agree, because we don't know the long-term effectiveness of these tech stocks. Are they going to perform like the US ones? We don't even know if US ones are going to perform well. Once again, I would predict that we should see tech probably pick up and do well over the next couple of years, but it's hard to say, right? Are we going to see the same growth? We don't know. Probably not the same high level, but I mean, we'll have to wait and see. And this is why I would consider this more of a riskier ETF. I wouldn't hold it long. I wouldn't hold this ETF just by itself. But you know, there's nothing wrong with maybe dedicating a small percentage of portfolio to some tech stocks. So a lot of these stocks are ones I usually don't cover on this channel because we're more dividend. We're more kind of classic, like we're kind of more classic Canadian stocks and whatnot. But we have some Constellation Software, I think that's how you pronounce that. Shopify, which everybody knows. CGI, which is a new one, I'm not too sure. OpenText, we have Lightspeed, some more familiar ones like BlackBerry and other things like that. So these are all the informational tech stocks in Canada. And you can see that this fund, the weighting factor of these different stocks, Constellation and Shopify, in CGI and OpenText pretty much hold the bulk of this portfolio. That's about 40, 50, 60, almost 70% of the portfolio is in these 4 stocks. So it's important to be aware of that. And we've seen Constellation and Shopify like go crazy over the past couple of years. So I think those 2 stocks are probably accounting for most of the growth inside this ETF. So you might want to look at those individual stocks too if you're kind of interested in this ETF. But that's a quick little overview of this ETF. It's a nice little exposure to some tech companies. And once again, if you guys think that the Canadian tech companies have some potential, definitely take a peek at XIT. So the second growth-based ETF I'm going to be talking about today is going to be XCG, and this ETF is going to be focused on companies that are consistently growing their earnings over time. Alright guys, so the next one we're going to talk about is XCG. You're going to notice that the X is going to be a common theme with these ETFs, and this is going to be exposure to large and mid-sized Canadian companies whose earnings are expected to grow at an above average rate relative to the market. So you guys can see you can get ETFs for literally everything. It's kind of interesting. I'm always learning, even though I've been investing for a couple years myself, I'm always learning about new things. There's so much to learn about investing. It's very interesting. But this can be used to help tilt your portfolio towards growth stocks. And once again, growth stocks are going to be typically those stocks that have higher earnings and are typically growing their earnings. That's kind of the theme. And that's why they perform well. And I think everybody should hold at least some type of growth stocks. I mentioned earlier in this video, growth stocks are good to hold inside your TFSA. It's just up to you to decide which markets and which ones you want to hold. So this fund is XCG for the ticker, trades at $46 Canadian, and year to date it is up in just under 19%. And to switch things up, I'm going to click on the fact sheet. BlackRock and Vanguard and other ETF websites, they always have good fact sheets that you can take a peek at, and this is a nice little way to see some information and some nice little graphs and whatnot. So here's the growth of the stock since inception, and we can look at some different performance here. So I'm mostly looking at the annual performance. We can see the fund here. So over the past 3 years, it's up 15%. Over the past 5 years, average return of 11%, 10 years 8%, and since inception, the average return is 7% per year, and we can see the last 12 months here. So that's interesting to note if you guys want to take a peek at that. This one hasn't seen as much growth as the other one, but it's been pretty consistent. An average return over the past 10 years of 8% is not too bad. It's not super crazy, in terms of like US stocks, they've done better, but for Canadian stocks it's decent. And obviously some years are going to be higher than others, kind of thing. For example, last year was obviously a lower year for most stocks, so depends on what the stocks are, right? Some other facts about the fund: it has a number of holdings of 44 holdings, as you guys can see. Hopefully this text isn't too small for you guys. So 44 holdings. Management fee is once again at 0.5%, so kind of in the middle, which is pretty normal for a lot of these ones. And here's the holdings. So I'm going to go back here just so we can take a quicker peek at the holdings. I'm also going to take a quick peek at the distribution yield. So we have a 1.68% distribution yield. So this is more of like some of the stocks you're going to see have like little yields, or they're growing their dividend yields. So these are also good dividend growth stocks as well if you guys want that long-term dividend growth. But you guys can see here that the risk factor on this one is going to be medium, and I would say this is more like medium to low to medium. We're getting kind of a mix of everything here. So Shopify is going to be the number one thing once again. So once again, a lot of people are looking at these tech stocks and kind of like thinking the future is pretty bright. And I do agree. I do think there's potential for good tech stocks to do well, but this one's a lot more diversified. We have tech stock, Shopify at 11% in the weight. We have CNR, which is at 8%. CNR is a great stock. Enbridge, and notice you have a little bit of exposure to everything here. We have Brookfield Asset Management, which is an interesting financial one to have. I would more expect to see a bank here or something, but nonetheless, they do have that there at an 8% weight. Bell, Energy, Pacific Railway, Constellation, and once again, and then some other ones here. Alimentation Couche-Tard, which is a good one. So lots of different stocks here in different sectors. So that's one thing I really like about this ETF. We have lots of diversification, and you guys can see the different exposure here. I should have checked that in the last one, but we didn't really need to check because it was all tech-based, right? But you guys can see like 20% industrials, 18% in tech. So nice little diversification off the board. So with this ETF, you could definitely consider this one to be kind of held more as an overall portfolio approach. Once again, you might want to split it up between 1 or 2 or 3, but you could definitely hold a bigger chunk of your portfolio in an ETF like this one with its XCG. And last but not least, we're going to be focusing on an overall market, growth-based, Canadian-based ETF, and this is one of my favorites, and this is going to be XIC. And the last growth-based ETF we're going to talk about is one that it's pretty popular. I've invested in this ETF myself in the past with Wealthsimple Invest, and this is a very traditional ETF, and that's XIC. This is the iShares Core S&P TSX Capped Composite Index, and this one trades at $32 Canadian, so it's a little bit cheaper, and year to date it is up 21%. This really is an example of an ETF that if you wanted an ETF that would basically you could just hold for all your Canadian stocks, this is one you could 100% do that. It's exposure to the entire Canadian market, so you could think of it like an S&P 500 for Canada or something like that, really focusing on the broader base Canadian market, and it's going to have a little bit of everything in here. It's low cost and is designed to be a long-term core holding, and I would 100% agree with that. If you're looking for an ETF that's all Canadian stocks and is going to give you nice exposure to everything, this is definitely one to consider. And I do agree it is a pretty good fund. So average annual return, we'll take a peek here. So over the past year, it's up 28%. Obviously, Canadian stocks had a pretty good rebound from the pandemic, and you can see on the graph here. Past 3 years, it's up 11%, 5 years, 10%, which is pretty good. 10 years, once again, that 8%, and since inception, about 7%. So once again, pretty good fund, pretty decent. In terms of growth, you'll kind of notice this trend that Canadian stocks generally kind of lag a little bit behind US stocks. That's just the way it is. But it depends on the years, depends on the decade. But overall, this is why I kind of prefer the US stocks, like the VFV or something to stick inside my TFSA, just because if I'm going to go for growth, I do believe that, I like to get a little more bang for your buck, but once again, it's up to you guys, and it's whatever you guys want to do. A lot of these ETFs are great. You can invest in them and do well no matter what. So it's up to you guys. Number of holdings is 228, so a lot more exposure across the board for this one. Distribution is 2.47%, which is once again getting a little bit higher. So it's a little bit in that middle zone. It's not a super high yield, but it's not super low either. It's kind of like in that medium range, that medium growth range that you would expect. And once again, this is a pretty stable fund, and I'm really big fan of it. Fees are pretty much non-existent, so this is one thing I really like about this fund as well. 0.05%, that's pretty much non-existent. That's like Vanguard territory. So if you're looking for a low fee fund to hold long term, definitely something to consider. And risk factor is medium. I would say you can even put this low to low medium in my opinion. I think this is a pretty safe fund with pretty good value. So here's the holdings. Once again, this is more of a traditional based Canadian ETF, and this is one that I'd be a big fan of. So you have Shopify as number one. So once again, they're going for that big growth with the tech companies. That's what they're thinking, and I think a lot of people are as well. But then we have more of the traditional ones like the banks like RBC, TD, CNR, Enbridge, Brookfield, Bank of Nova Scotia, Bank of Montreal, CIBC, Bell, and then so on and so on. I'll kind of see a little bit more of the holdings here, but once we get to the bottom here, it kind of the weight factor does go down quite a bit, but keep in mind it does add up. We have TC Energy, CP, Canadian National Resources, Manulife, Nutrien, Constellation, Waste, Barrick, Alimentation, Couche-Tard, and TELUS. So nice exposure to everything and nice good mixture here. And I'm a big fan of the banks. I'm a big fan of all these different companies. I hold a lot of these companies in my portfolio if you guys watch my videos. So I really like this fund. Financials are at 31%. So once again, more exposure to finances, but in my opinion, those are the best long-term consistent Canadian stocks that we've seen. Industrials is number 2 with energy, information, materials. So once again, pretty good exposure to everything with this ETF, and I'm a big fan of it. Alright guys, so if I was to basically pick a favorite from these 3 ETFs, you guys probably already know which one I'm gonna say is gonna be my favorite, but that would be XIC, because I do believe in the long-term value of investing in the overall market. So if you're going to go for Canadian growth-based stocks, definitely consider a fund like XIC. But ultimately, guys, if you guys want to take some more risk, definitely check out some of those tech-based ETFs, or consider adding some of those stocks inside your portfolio. If you guys want to get some of that growth there. So hope you guys enjoyed this video. Let me know what you guys think in the comment section. Take care, and let me know what your guys' favorite growth-based ETF is in the comments below. So take care, have yourself a good one, and I'll see you guys later.